Good evening and welcome to Money Matters. I'm your host, Brian Kohute from HJ Wealth Management. My co-host, Jane Scaccetti from Drucker and Scaccetti. We have a special guest, Rhonda Costello, Executive Vice President of Republic Bank. We have a great show. Good to see you, Jane.
Nice
How
to
are
see
you?
Good.
We were talking about savings off air.
Yes.
I thought maybe we should talk about it on air.
There
So
you
I know
go.
you had some great tidbits that you instilled with your kids, and I think we should share it with the audience.
So we were talking about the fact that I've always tried to encourage them to save. That once you start saving a little bit, you want to save more and more. And someone had introduced me to a book called The Richest Man in Babylon. And in that book, it's written by a banker, which we'll talk to a banker a little bit, but it was written by a banker who basically said you can live on 90% of your income as well as 100. So you should always put away 10% of whatever comes in your hands. So if your take-home pay is $1,000 a month, $100 goes into the bank. If someone gives you $100, $10 goes into the bank. Then the second 10% that you have, you should reduce your debt. Save first, reduce debt second. And if you have no debt, then you should be putting away between 10 and 20% of your income always into a savings account. So I've always tried to really instill that in both clients, family, and friends to encourage savings. And the other one, it's a simple tip, is you try to live on the income you earned last year. So if your take home last year was $1,000 a month and now you get a raise and it's $1,200 a month, you live on the $1,000 a month and the other $200 goes into savings. And you do that until you get to the second year. Then you can give yourself the raise from 2 years ago and you continue on. And it's just a way of forced savings. And once you start saving, you don't want to stop.
Right, yeah. I mean, it's cliche, right? Pay yourself first, but so many people have a hard time doing it and think they'll catch up, which never happens, as we know.
Right. Or they try to do it big.
Right.
And so they can only do it for a short period of time, and then the denial of, participating in activities with friends or with families become too much. And so if you swing that pendulum too far in one direction, it goes back to the other. But that 10% to 20% seems to be something that is tolerable by most people. And then once you start saving, you find your bonuses. Try to use 50% of the net bonus for what you want. The other 50% you save. I've always said a third can go to taxes, a third can be to savings, and a third I get to spend.
Right.
The only problem is taxes are a little higher than a third right now. So
your job's to make sure that doesn't happen, right?
Yeah. Well, I hope everyone voted because I'm not sure I could do it alone.
So, no, it's great. I mean, we do a lot of financial planning in our office, and we come down to that same number. And I haven't read the book, but I'm gonna. But 10 to 20% to get it done, right? To have enough so that you can retire on your terms and not like working into your 80s.
And we talked about how 401ks, right? I had to explain to my daughter why she wanted to at least save enough to meet her company match. And she was having trouble explaining it. And I said, look, if you give me $1 and I give you $2 back, if you don't give me the $1, I can't give you the $2 back. And that seemed to make sense to her. And after that, she understood she should save in her 401k up to at least the company match.
Right, yeah. I mean, that's amazing. We manage a lot of 401k plans, and we see the versions all the time. And, they don't. They leave that free money on the table. Yeah. And the only thing I can think is they think there's a catch.
Right.
There's not really a catch. It really is free money.
It really is.
Because the owners want their money in too, and they want the same match. So it is. The one thing I love about the 401k, it's a level playing field.
It is.
Everyone has the same benefits. Everyone has the same opportunity to save into it. So it's our number one. If our clients have a 401k, that's your first line of savings. That's where you have to go first.
So you're finding more people using the 401k or the Roth?
It's interesting. I'm a huge fan of the Roth. Love the Roth. I think Senator Roth should write me a letter thanking me because, but it really, and you probably know, you have to run the numbers, right, and see where you're at. But I think in simplistic terms, where most people have saved pre-tax, and you come to retirement and work with us, not a whole lot we can do, right? Coming out of retirement account, we're paying taxes.
Right.
If you have pre-tax money, Roth money, and regular savings, then we have a lot of control over income and taxes that way. So I'm usually an advocate of people should try to have some Roth put away.
Yeah, I think what the issue is that tax rates are so high that people want that little bit of relief so that they can get the edge of having that additional dollars working for them until sometime in the future when they have to pay taxes, and then everyone's hope is that tax rates will come down.
Yeah, it was a great point. I mean, if you're in a 40% bracket, it's hard to give up that deduction,
sure.
right?
Yeah.
And you know, if you're not familiar, the Roth, you don't get a deduction for putting the money in.
Right.
It grows tax-free. So, like for your daughter who's just starting
Yes.
out, you probably told her to do the Roth, honey,
Yep.
right? Because she has all this time. But you know, as you get older, you might not make up the difference in taxes.
Well, and presumably, the younger you are, the newer in your career, maybe your tax
Lower.
rate is
It's
not
lower
as
anyway.
high as
Exactly.
someone who's been, making more money, and therefore they're on the incremental higher
Yeah.
tax rates.
So, I mean, this show's obviously taped, so we tell people don't time it. But we're kind of getting around year end, so it's where we get busy on.
Yeah.
People trying to fund retirement accounts. What do you see? Like, do you see a common theme about people trying to sock money away?
So I do see not so much people trying to sock money away or to save, but I do think that people are starting to realize that tax can be a business strategy and it can be a personal strategy. And if you can really control your taxes, you can increase your cash flow, or you can control, by knowing your tax number, you control cash flow. And so you're not having to cash out of a savings account at an inopportune time when a stock might be up or down. So I think people are starting to realize that planning, both from an income tax and a cash flow, can really help you. So year end is when most people take that deep breath and they look at their finances and they look to see what charitable donations have I made. If I'm sitting with capital gains in my accounts that are unrealized, maybe that stock is what I should gift to my school or to my charity and never recognize the gain. So it's when you can usually get their attention for year-end planning, because everyone expects it.
Sure.
And then ideally you try to do that once or twice during the year. It's not something you want to have a discussion every day, but it is something you want to do once or twice during the year so that you're not waiting until year-end. But clearly year-end is when people start to focus.
And just for people, that doesn't mean in April you come to your accountant and say, what can you do for me, right? The damage is done at that point.
Well, for last year. But what we do is turn that converation around for this year, because you now have 8 months ahead of you that you can still plan.
Yeah, I mean, we'll see. I mean, obviously, we're talking. It's a lot of debates for everyone's promising reduced taxes, at least on the Republican side. We'll see what happens. I mean, obviously, we hope something happens. But
it doesn't really matter in some respects because there's still a tax law.
Right.
And it's always going to be complicated because not everyone's income is earned the same way. Not everyone has income in the same manner. It's just a complicated situation.
Yeah, and I don't think we're not escaping that, right? Mm-mm. So, what else? Anything else going on with your clients that you're kind of hearing out there?
I think that just the pressure of the tax rates being so high and the aggressiveness of states. So some who have businesses, and those businesses are more internet-based. The states have become more aggressive with the Amazon type of transaction to try and tax where the goods are delivered. It always was, where the goods were sold. So it was where it was shipped, where was it sold, and now it's where it's delivered. So you have states becoming much more aggressive, saying, okay, I want my share of sales tax, or I want my share of income tax. And in some cases, you could end up being taxed in 2 states on the same exact income. Right. So we're finding that it's not so much the federal as much as the aggressiveness of states and local jurisdictions really are where you can save some additional tax dollars by being tax smart and arranging your businesses in a way that maybe you're not falling prey to those state tax clutches, because they're all short of cash, every one of them.
Yeah, they're all, So we've been having more and more conversations, I wonder if you have too, about clients thinking about retirement and asking like, hey, here's the states I'm looking at. Tell me which one is the more tax efficient state, right? Because
and it's true, right? So Pennsylvania has always been
pretty
really
good. It's not a bad state to retire.
It is not. It doesn't tax retirement income, and its tax rate right now is still. And you said this is taped, so we don't know if it's going to be up, but it's under 3%. So that's not a bad place and not a bad state to retire. But there are states, New Jersey, a lot of people have left New Jersey when it comes time to retire or close to it, when they know they're going to get a deferred income payout, or any other kind of option payout. They think twice about which state they're going to live in to retire.
Yeah, no, it matters. Right?
Yeah, that's why a lot of Floridians.
Yes, Florida's busy, so we'll see what happens with Cuba if everybody rushes to Cuba.
Wouldn't that be great? Wouldn't that be great? It's a place I'd love to go to.
That's right. So we'll see. We might get a chance here. So, Yeah, so are there any tax strategies that you're employing that you see clients should be thinking about? And we talk about, if you have some losses, especially with the way the market's been a little bit this year, there might be some opportunities to trim some losses, offset gains. Anything else you're seeing out there as big opportunities?
So I think with the interest rates low, you're seeing people consider buying real estate, whether they're residential rental units or investing in REITs. If they're buying the real estate outright because they think that they can get great financing, they're a little surprised to find out that the passive activity loss rules will prevent them from taking losses in passive activities, which real estate is considered one for pretty much everyone, against ordinary income. So they'll buy a couple of units or they'll buy a townhouse and they'll be renting it out, and they're not understanding that loss is carried forward until a time that they have income. But that doesn't make it a bad investment. In fact, it still may make a lot of sense if the rental income and the appreciation of the property is high enough and interest rates are low enough. It could be a good investment, and they should come to people like you to determine what their asset allocation should be.
Yeah, done right, you can have some positive income and no tax, right? But I think you're right. Some people get into the lure of it's a big tax shelter, and it's like, well, still need some income, right?
Yeah, and we're also seeing people trying this. The laws of vacation homes are pretty complex, and so people can get caught up in that, and they'll have a vacation home and will be allocating it properly on their tax return, and then they'll convert it to a residence, and then they lock in some of the losses that they'll never be able to take on those homes. And those rules are all complex. They're not simple.
Right.
But we are seeing more and more people looking to invest in real estate. Private equity is becoming a little bit more popular because they feel like there's an opportunity there for growth. And I think the stock market, it's kind of hard to deny what it's done the last couple of years, but people are still a little concerned.
Sure. Yeah. No.
What are you saying?
Yeah, same thing. I mean, most of our clients feel like they're in a catch-22, right? Cash is almost at zero. Bonds aren't much more than that, so they feel like they're forced into the stock market. I think to your point, it's why real estate sounds attractive. Private equity is starting to sound attractive because how do you diversify your portfolio and get some better returns than zero, right? So.
And then you've got the international market, and what's going on in China is not helping anyone that had a diversified portfolio with international stocks are not doing well.
Exactly.
They had all U.S. stocks, they probably are still okay.
And that's, they've really been the trend the last, 5 years at least. International's underperformed for a while. So, and
how long do you wait?
Well, and that's, typically when people bail on, it's when it's the wrong time, right? So, we try to stay diversified, and you just kind of, what we say is if you can sit in your seat and not get shaken out of it, you'll have You'll have a good investment experience.
You know what else we're seeing too is the whole conversation around talking to your children about wealth.
Yeah.
Depending on wealth is all, it depends on the eyes of the beholder, right, as to what is wealth. But when you talk to your children about if something happens to me, what is expected by the family, and so many of the studies have shown that those conversations are more important than do you have a diversified portfolio and what are the tax rates? The most important thing is to make sure that the families understand and have communication with the parents to know what the expectations of the family are, to who do we take care of, how do we invest, who do we trust, who do we talk to. Those are the things that if you're not clear about, will dissipate a family's wealth. They have the concept the shirt sleeves in 3 generations. The first generation earns it. The second generation watch the first generation earn it, so they're careful, but they don't grow it. They just use it, but try and maintain it, right? And then the third generation has had not any of that experience. They just consume it, and then you're back to shirt sleeves trying to build it again. Yeah. And the reason that's a popular concept is because that's true. Yeah, and you see it a lot of family businesses or a lot of family wealth end before that third generation is finished. So you want to make sure you're instilling in them the values of the family when it comes to savings and wealth and investments, and that is what will carry that wealth and make good stewards by your children of your wealth.
Yeah, no, it's a great point because the World War II generation will not talk about it, right? Money's taboo. Baby boomers who feel like they tell their kids everything, feel like they've done it, but they really haven't. They haven't really talked about money with their kids, but they think they did, right?
They think they did.
They kind of go thinking, oh, they know what I want. But you're right, they don't.
I had the son of a client tell me, my father told us all to come over before the Eagles game, sat us down and said, you know what, there's a lot of money in this family. And if anything happens to me and your mom, you guys are going to inherit it. And they all looked, and he said, okay, let's go watch the game.
There was the conversation.
Once he got that far, he didn't know where to take it after that. He didn't know what to say. So they all went, okay. And he said, I'm more confused now as to what I'm supposed to do or not do, or who do I trust, or
it was easier when
who do I call. He said, now I'm worried. Before that, he wasn't worried.
Exactly. So do you have time for a question?
Sure,
shoot. Robert Thomas from Philadelphia asks, is trading stocks in his IRA a good idea for a tax-efficient way to save money?
So no, not if you have that choice. So if you save, and your IRA is not taxed on any gains or losses incurred from sales that occur within the IRA. So if you buy Apple at 100, it goes to 400. You have a $300 gain in your IRA, it's not taxed, but you now have value of $400 of cash sitting in your IRA. When you take that money out, you'll be taxed at ordinary rates, which could be as high as 46%. So the whole point of having a capital gain, taking a risk in the stock market that usually is rewarded with lower taxes, is lost, because you don't pay the tax at the IRA level, but when you withdraw it, you pay at the maximum ordinary income level. So generally what people suggest, and like you, is they talk to people like me, and what we do is we try to keep the investments in the 401ks and the IRAs in ordinary income producing interest, or that's the portfolio piece that's more stable, and keep the capital gains or the stock market risk outside of it so that you can get capital gains rates as an individual. Yeah, so it's not tax efficient at all to trade in your 401k and IRA, but as a friend once told me, but that's where my savings is, so I guess there's some balance to that. But as far as tax efficiency, it would be better to hold stocks, appreciated securities outside of your IRA.
Or a Roth might be a spot to, I'm not a big advocate of trading because most people can't do it to make money, but
so it's no tax either time. So yes, I think that's correct.
Great. Well, great answer. If you have a question, here's how you send it to Money Matters.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back to Money Matters TV. Now it's time to introduce our special guest, Rhonda Costello from Republic Bank. Welcome to the show, Rhonda. Republic Bank's been around for a long time. Tell us about it, and how's it different than the other banks in the area?
Well, Republic Bank started in 1988. When it started, it was basically a commercial real estate focused bank, a boutique bank with high levels of customer service. Time goes by. Then we move up to 2008. The bank had gone through a few iterations, a couple name changes and all that. But in 2008, a whole group of us, we are former Commerce Bank executives, came in. We had noticed that Vernon Hill, the founder of Commerce Bank, had invested in the bank. So personally, I simply just got
like, what's he up to?
Yeah, exactly. Something's going on here because this man knows how to do it, right?
Yeah.
So I got on my laptop and just emailed him and just said, hey, let me know if I can help. I was there. TD acquired us in 2007 and went through that process for a while. And then when I saw this, I thought, oh, gosh, that might be like going home and building again, because I had started with Commerce in 1985. At that point in time, we only had 8 locations. By the time TD acquired us in 2007, we were almost up to 400 locations. Wow. So that's a lot of growth. And for me, professionally speaking, it was phenomenal. So got on my PC and I just said, let me know if I can help. Got an email right back that said, yeah, meet me at my home next Tuesday at 10. So that's what I did. I went in and we had a talk. And he explained to me that he is was a consultant and major shareholder in the bank, and that explained what the plan was going to be, kind of like grow commerce all over again,
Okay.
but at an elevated level. Obviously, there are improvements in technology and so forth.
Sure.
So that being said, he said, all right, now you got to go and interview with the CEO president. And so I did that, and luckily I passed, right, with flying colors, thank goodness.
Right.
And then all of us simply started to migrate over. In 2010, well, as we all know, in 2008, the bottom fell out.
Tough time to be a banker, right?
Oh yeah, it was a
So,
tough time.
yeah.
So we made it through that, right? And the bank really focused on commercial real estate. So as you could imagine, that like tanked.
Sure.
So we had a lot of work to do to make sure that we were going to be on a path to be successful. So for the next few years, we worked on that. In 2010, then we decided, okay, fine, it's time for us to expand hours, it's time for us to start looking like who we want to be. So that's what we did. We rebranded, went from a blue R, now we have a big red R, and that branding means a lot to us.
Right.
And then since then we continued to work on the infrastructure of the bank, grow, expand the product line, get better systems in place and more advanced systems in place in technology, and that's what we have done. And now we were ready and are ready, and we're on our growth plan. We're calling it the Power of Red is Back growth plan, and that's what we've been embarking on. And we have had the opportunity to grow, I guess an additional 5 stores over the last few years, and we're about to be in the ground in another one in South Jersey, and we should have that finished. It usually takes us about maybe 18 weeks to get that done. We are, again, this year going to work on 2 more, and then another relocation in Ardmore, because we are located in Philadelphia. We have 4 stores in Center City.
Right.
We also have them in the outlying burbs, the Northeast, and then we also have a whole group of stores in South Jersey.
Okay.
So hold on a second.
Yeah.
So while retail is talking about getting away from bricks and mortar, what you're talking about is building more bricks and
Absolutely.
mortar. So the philosophy is?
The philosophy is we are a community bank, and we believe that your store is the face in your community. So therefore, we also believe in providing people different avenues to bank. You can come in store if you want, and guess what? You really get to talk with someone who's going to get to know you, create a relationship with you, not just do it over the phone or online or on your mobile, whatever you
Right.
want to do, but we want to provide you all the avenues, and that's what we do. So you want to call us in our call center? Great. You want to come in? Come on in. You want to use the mobile banking? Use it. Remote deposit? You got it. So it's
fascinating.
it's like have it your way.
So just listening to you and then listening to you talk about 1985, right? And so I'm going, women in the C-suites and women on boards is an issue that is very near and dear to my heart.
Yeah.
So you were talking about breaking through to that C-suite.
Yep.
And in a field that has not been kind to women in the past, which is banking.
I agree.
Yeah.
Yeah.
So what changes are you seeing? Are you seeing any opportunities for more and more women in banking?
Yes, I am. Yes, I am. I can tell you, when I first joined Commerce and I was elevated to a regional vice president role, I was, for many years, the only woman in the room.
Amazing.
Yeah. But you know what? It makes you better, in my view.
But this is the 90s you're
Right.
talking about, right? We're not talking about like 1940.
50.
Right.
And I remember when there wasn't one female commercial lender, because it was the guy's world, right? But now you see that that's completely different. We have many, many female lenders.
And are they
women.
making it to that C-suite?
Yeah,
Yeah.
At least in my company, our chief risk officer is also in our C-suite, and there's only pretty much like 5 of us.
Right.
So yes.
2 out of 5. That's pretty good.
Yeah. So we're very, very happy with that, and we plan to continue down that path. We have got of our officers. If I were to guess it, would I say there are more men? Yes, but would I say there's a fair number of women that you can gain comfort with? Certainly room for improvement, but absolutely.
Nice to hear.
Absolutely.
So what?
No, go ahead. Yeah, I was just saying it's interesting because most sites say women have better risk management controls than men, and you see like 08, bad real estate loans, a major financial crisis coming out of the banking sector, and I wonder if they're finally learning that some diversity around might be helpful.
It really is, because
the studies have shown that.
Absolutely, no question about it. And in addition to that, I mean, women, honestly, we find, or in my opinion, they're better leaders. They have a way of interacting with teams that are completely different than their male counterparts. It's that EQ, I think, that plays well. It's that caring piece. It's also the fact that they're extremely detail oriented, and it seems to be working.
Right. So what made you get into banking to start?
Okay,
We talked about saving, so I don't know. Are you a
Yeah.
saver and you decided to become a banker? Or
No,
what? Yeah.
I absolutely am a saver. No question about it. And I am looking to retire out of New Jersey, just so you know.
I
That's
got
where
it.
I live right now.
Yes.
Yeah, I'm with
But
you.
yeah.
I'm
Yes.
with you.
But yeah, so I got into banking. I was going to college, and I was going to community college at the time. So I got a job as a part-time drive-through teller, and literally loved the banking industry so much because no one really understands how diverse it is. There are so many different things that you can do in a bank and grow your career. So once I did the teller thing, and then they moved me over to consumer lending, so I learned how to make loans and so forth. And then frankly, I just never left.
Right.
And I just continued to grow. So became a store manager, then proudly to say one of the first regional vice presidents in Commerce Bank when we only had 3 regions. And my career there also then went into, I became the director of HR,
Right.
which was really interesting, I'll say.
Yeah.
Then also went into all the new markets and helped started the new markets as we expanded. Ultimately, I was running Pennsylvania here, which was our largest market, and I said, you know what, I need to do corporate again. So lucky for me, the dean, Commerce University, a lot of people didn't realize, while you have the main campus in Mount Laurel and offered hundreds of very valuable courses to our employees because we invested in that significantly, also had 22 satellite campuses throughout its footprint, you know, all the way down from Florida all the way up to New York and so on and so forth. So I took that over, and we had probably running that or working there, instructors, we had probably well over 100. We offered 300 and some online courses for all lines of business.
Right.
And it was a big rewarding job because you had impact across the board. So, and then ultimately when TD acquired us, that's the role that I was in, and then ultimately I came over here.
What are you seeing today in banking that alarms you?
Oh, basically the regulatory requirements. They're very concerning. They're costing banks a lot of money. I personally think that the pendulum has swung while it was yes, and so and it can really kill a bank, especially a community bank. But you know, it is what it is, and we work with it every single day.
I mean, it's really forced banks to become bigger, right? I mean, do you see opportunity? I guess what opportunities do you see in front of you or Republic?
Well, right now we're in a growth mode and pretty much organic. That's how we want to do it because we find it to be easier that way.
Not taking somebody else's baggage. Right.
Exactly,
So.
exactly. And plus our brand, part of our branding is our building. We have new glass buildings. And people always ask us, why do you do that? Why do you invest that kind of money in there? Again, it's the face of your company. And 2, they're inviting. Okay? It's a customer.
Shine from the inside out.
Exactly,
They do.
exactly. We have so many people that just come in and say, it's beautiful, we just had to come in and take a look. And so then we engage our customers, start talking with them, and then next thing you know, they're our customers, they're talking to their family, friends, neighbors, and they're not only customers, our goal is to make them become fans.
Right.
Yeah.
So we have about a minute left or so. Anything else you want to share about the bank, Republic, that you see going out there or you want the viewers to know?
I think the viewers should know that they should come and bank with us. Check us out. Absolutely.
So,
You'll like what you see.
Do you see
and what you
changes on how
experience.
millennials are banking? Are they doing it any differently?
They are, and you're going to have all of that. You're going to have your online, you're going to have your mobile. But I firmly believe, and I think it's been shown, that typically you want to go into the bank at some point. You want to know it's there. It's that comfort factor. In addition to that, I can give you a personal experience. Your daughter, my daughter, who's now 25, 23, graduated college, moved to North Carolina, talking to her about what bank she was going to go to. And someone was giving her advice to open up her account online. Now she's that age, and she actually said, Mom, I couldn't do it. She said, I want to physically go into a bank and open up my account because I feel safer doing that, working with the person in front of me, rather than putting all that information online.
Yeah.
Great. I think we have to end it there. So that was great. I appreciate that. So please join us next week. Our guest will be Manish Garawa from M Leads. And as always, your money matters. Thank you.